A very good Monday morning to everyone. This is Doug Campbell with Right Way Options and the morning market preparation video for October 9th, 2017. Hey, this market has just been strong, and it looks like it wants to continue that this morning. Looking at the futures are actually pointing to a gap up open here on the diamonds. Looks like the diamonds could easily make a new record high at the open this morning as those bulls just continue to push well beyond what most people would think is logical. But, you know, logic doesn't really apply when there's emotion involved in a run like this. So we're popping up another, big move this morning at the open. Now, let's keep in mind that the banks are closed today. It is a U.S. holiday, Columbus Day. And banks are closed, so we could see after this morning rush a little bit of a light or choppy market. We'll see. Just because, you know, part of the bond markets and things are closed down today. So don't be surprised to see a little light, choppy price action after the market opens here. Let's take a look at the SPY. SPY also looking very strong and could make a new record high print at the open. So here again, just 1, 2, 3, 4, 5, 6, 7, 8, and this would be 9 days up. A run like this can last much longer than anyone would expect. Just when emotion kicks in, you know, logically we look at this and think, gosh, it's got to pull back, it's got to rest. And I have to tell you, I used to make a terrible mistake as a new trader, young trader, in predicting when that was going to happen. And a couple things would go on here. Either I would get short early when there's no evidence here in the chart of the market slowing down to the upside. I would get short the market anticipating the pullback, obviously only to get run over by the bulls as they continue to push higher. Or the second thing I would do is I would completely stop trading, just stand aside and watch, thinking that it absolutely had to pull back. And that often resulted in me missing the biggest bull run of the year, simply because I didn't want to participate. I was letting my bias get in the way of what's going on. Now, I am not suggesting that you chase. I'm suggesting that if you want to trade this market, make sure you're buying with the preparation that the market could begin selling off at any time. We don't know when it's going to happen, but you want to be prepared for that if that occurs. And what that means to me is when I buy trades, when I get long a position, I want to buy something that is at or near a price support where buyers are stepping in. Okay, so for an example, let's take a look at this chart in BMY. BMY breaking out of this nice consolidation, moving up, pulling back, and buyers stepping in at price support. See, I can buy this with my stop loss very close, rather than trying to chase something that's already well within its move. Because if the market does reverse and pull back, I don't have a whole lot to lose here. You know, this could reverse and pull back and I get stopped out. But if the market continues higher, then this just keeps chugging on up higher, and I can participate in that bullish market as long as it wants to stay bullish. So I'm taking a low risk entry position. Do not chase a market that is over, or a stock that's overbaked to the upside, because you'll often get clobbered when the market does pull back. And it will. It always does eventually pull back. It will pull back. We just don't want to chase it into that run. We want to buy at a very logical or defensible position when we do that. Let's take a quick look at the IWM. Now, IWM is actually setting up a pattern I like to trade. It's called pop out of the box pattern. It requires 4 days and a nice tight consolidation. And what I look for is a break of that box, either to the top side or the bottom side. I don't want to predict which way it's going to go. I'm going to wait for it. And this morning it looks like we're going to test the upper side of this price action, and IWM could actually break to the upside. Now, it's a little bit early because we haven't come back over to the trend. We don't have to, but it's very common to see one of these boxes actually consolidate over toward that trend, get very, very close before it pops. So we'll want to watch this pattern very closely. There may be a trade coming here in the IWM soon. The Qs were able to make an all-time record high on Friday, while the other indexes just, kind of paused a little bit. Nothing bearish. They just paused a little bit. And the Qs actually pushed on through to make, just following through on that big breakout on Thursday, pushed on through and setting a new record high on Friday before the close of the day. What a nice move that is. What a beautiful looking chart that is, suggesting that the Qs wants to participate with the overall market. Let's take a quick look at the VIX. And this is the place where I start getting a little bit of a pause, where I want to be prepared. I don't want to predict. I want to be prepared. We had this historic low close, closing, down here, almost making 9. And we had a little bit of a rally back on Friday. But if you look at this chart overall, what I see is the potential for complacency. I see a chart that is abnormal. Okay, to say the least, this is abnormal, and it can remain abnormal for a long time. It doesn't have to mean it just necessarily pops back. But I do have a little bit of a worry for complacency in the market, meaning that we're just buying like crazy. We're not paying attention to what's really going on. Now, that's okay, but I want to have a plan. I want to be prepared if the market does shift. So as this market has been going up, I have been selling or taking some of the trades off into that strength, meaning that I've been lightening up. I'm staying long the market. I'm not changing my bias to a downside market. I'm staying long, but I am taking profits as I go up, relieving the pressure on those trades and reducing my risk to the overall market if we do get that shift lower. Okay. And I will continue to look for new long trades as long as we continue this trend, but they have to be in a good buying position. I will not chase something like this. I want to buy at or near a price support level or near that trend rising. So that's what I'm looking for here. So don't think anything that I'm suggesting here is saying bearishness is imminent. I don't know that. No one does. All we can do is continue to trade this market as it wants to move higher, and those bulls continue to charge forward. Okay. With that, I'm going to take a real quick look at a chart called T2122. And this is a chart on TC2000, and T2122 is really nothing more, okay, than an average of 4-week new high-low ratio. How many stocks are making new highs? How many stocks are making new lows? And you can see we're up here pretty high in this bearish reversal zone area, and we haven't really dropped too far out of that with that little bit of rest on Friday. Today we're going to pop right back up. So you can see we can stay up here for a while. But you can also see that over a period of time, this should actually provide some a little weight to move us back down. Maybe a little bit of profit taking, or it could be just a consolidation to rest that could bring us back down into this range where we may be ready to go higher. So keep an eye on this. And this is just one of those reasons why I think it's wise to be prepared, not necessarily be concerned of a very quick rollover, just to be prepared. Okay. And with that, everyone, I want to wish you all a very, very profitable day today. If this is the first time you've seen this information, please, do me a favor, click that subscribe button on YouTube. It will not be posted to Facebook today because, once again, I apparently have had my account hacked. I think I'm about done messing with Facebook. It won't be on Facebook today. So please, feel free to share this around. Subscribe to that YouTube channel if you can. And I will talk to you all very soon. Take care, everyone.